Hello, my YouTube friends, and happy Sunday. No, that is not a fire. Well, it is a fire, but it's not a fire. I got the ribs going today, so the smoke behind me. Hope it's not too distracting, but I need to keep an eye on it to see how things are going. Anyway, what an exciting week. Things were flying around. Forgive no videos, but I've been feeling kind of lousy. Probably sound in my voice, you can hear it. So stick around. Today should be a great video. I'm going to talk about the markets. I'm going to talk about some things that I think are good opportunities to get into. I'm also going to talk about the real estate a bit. A guy I watch, Jerry Abbott, who I really like his channel, has been kind of changing his tunes about what he sees in the market, and I really respect that. Anyway, stick around. Should be a good one today.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
So before I get into today's video, a couple things that I want to get out of the way. Um, First things first, as always, this is not financial advice. This is just me sharing my opinion. You guys need to do your own research and making financial decisions and not listening to me. And for that matter, I really wouldn't listen to anybody on YouTube other than just to see it as entertainment and get some ideas and make your own choices on your decisions. You really should reach out to a financial planner or anybody because everybody's finances are individual and you shouldn't be following anybody else's lead on that. The other thing is, if you guys could do me a favor and hit that subscribe button and smash the like button, I really appreciate the support. You have no idea how far that goes in YouTube's algorithm and other people finding the channel. It doesn't take much other than touching the button, so if you could do me that favor, that's all I ask for. I really appreciate it. I'm not out here selling anything. I'm just discussing my opinions on the markets. So, that being said, this week had quite a drawdown. Could have made people pretty nervous. Maybe you decided to cover some things or whatever you decided to do. But keep in mind, we had monthly options expiring on Friday. And I find that sometimes that makes the markets be a little bit dramatic in their moves. And I think there's just a lot of fear going on, but I think things are actually chugging along okay. The interesting thing as part of the discussion is interest rates staying higher for longer, and that should actually be beneficial for stocks. So I always find things a little bit counterintuitive sometimes. The reality is if inflation is sticky and if it stays higher, what does that mean for the typical company? Well, inflation allows them to be able to raise prices as well. And as they raise prices, as long as they keep their margins the same or potentially increase them, they're actually going to end up more profitable. The thing that throws people off is more profitable with a less valuable dollar, so to speak. There's lots of talk about the overspending and the fiat currency and what its real worth will be in time. And to be fair, it typically does become less valuable over time, which is part of what makes the other things become more valuable. If you have a widget and it's worth $1 in today's dollars, well, in 5 years, it's still a widget. Assuming technology hasn't changed and made that outdated and not valuable anymore, it is what it is, and that worth is still the same. So if the thing you're buying it with becomes worth less, I don't mean worthless, I just mean worth less, well, then that widget costs more in terms of the thing you're buying it with. I hope that all made sense. I know it was a little confusing, but I think that's why we see things go up over time. Rotation happen in the market because while we had a big correction, depending on what you're invested in, you might have seen things do really well. Like Hershey's had a great day, and some other things that have been out of favor for a long time, they actually did okay on Friday, which I think will be a longer term trend that we're going to see people rotating out of the Magnificent Seven and the other things that have gone a little too far, in my opinion, into the safety things. But I think shorter term, depending on what your time frame is, that it was pretty extreme on Friday, and we'll see that kind of move the opposite way for a little while until it gets out of line again and then rotate again, because I think these things have been oversold and they're a little out of favor. I know I did a video recently on Whirlpool. I thought it behaved great. I talked about Hershey's recently. It did really well. And Polaris had a decent day as well. So I think it's really interesting watching these things that are super out of favor actually doing okay on these down days. Another one I noticed that was up pretty good was Altria was up and had a nice strong day on Friday. Booking.com had great earnings. It shot up after the earnings. I don't know how many of you keep an eye on it. It's pretty interesting though, because by the end of the day, it really had reversed and wasn't doing so great. I think it's pretty fairly valued, and I like these stocks that trade at a higher dollar amount. I don't see that being an expensive stock. I still look at the price to earnings and the market cap and how things are growing. And what I like about that is most people tend to stay away from them. So I find that they trade at fair value because the institutions do a better job of actually calculating where they think a stock is valued versus the individual who just looks at something and thinks, oh, $10, that's cheap. That doesn't necessarily mean it's cheap if it's got a zillion shares outstanding. Anyway, Booking.com did really well on their earnings. They raised their dividend. They beat on top and bottom lines. And I think the future for travel looks great. And they have a good group of companies that they actually own. They're not just literally Booking.com. So that's one that guy Joseph Carlson was talking about that I thought he did a good analysis. It's done really well since he began talking about it. And I think it still looks good around here. Now, I'd also like to let me double check and make sure this is working. Yeah, give a shout out to Jerry Abbott, who changed his tune on what he thinks about the real estate market right now. He actually started turning bullish, and I don't think he's aggressively bullish, but he's mentioned some of the things we've been talking about on this channel about recognizing that inflation is sticky, and if inflation is sticky, that means housing gets included in that. Now, I'm not giving a shout out because he's changed his tune and now sees things the way that I've been talking about for a few years. What I'm giving a shout out to is respecting the fact that it takes a lot of courage to kind of transition on what you're saying on YouTube because he's been getting a lot of people viewing the channel, going there, getting people excited about talking about a negative economy. To actually flip from that tells me he honestly believes what he's talking about and sees things to have changed, whether right or wrong. I don't care if somebody's right or wrong. What I care about is their intent and giving the best advice. What that tells me about Jerry is he really believed he saw a housing correction coming and was very worried about it. So that's what he shared with the people on YouTube and his clients as well. As he's gotten more comfortable that the real estate doesn't seem to be falling, he's been able to transition and turn from there to give the opposite advice, not necessarily because he's right there either, but because that's what he actually believes. And if I were looking for somebody to help me with buying a home or investments or anything else, what I want is somebody on my side who's telling me what they think and not just what they're going to say to try to get me to act a certain way. A lot of people out there just tell you markets are going up or markets are going down because they think that's the best thing that'll help them, on YouTube grow their channel. So I see a lot of negative people on there that have been talking about an economy that's going to crash for the past 3, 4, some even 5 years, going on, throwing lots of fear and fear mongering and gaslighting and making everybody really stressed that this big collapse is coming. Now, markets go up and down, so a big collapse will come at some point. And when it does, they'll pat themselves on the back, going, see, I told you it was coming. It's a terrible strategy, and I hate seeing that because what I've talked about in the videos is I want to see people save for their future. And if you're constantly scaring people that there's some big calamity around the corner, it's just another excuse not to buy stocks and not to invest in real estate or collectibles or whatever it is and be scared that some big collapse is coming. Now, that's great if you're sitting on cash or buying treasuries and saving up your money, but if you're consistently living check to check and not putting yourself in the position to buy into these things when that big crash comes, well, what good is this advice anyway? And what I find is it generally talks people out of doing what's good for their future, which is saving and being in a better position so that when that retirement comes along, you're in that good position of having some cushion or some money around to be able to help fund the things you always dream of doing. Now, I don't know that it ends up better when you finally stop working or whatever it is, because I constantly think about that. And to be quite honest, actually, this weekend I started working on a dividend portfolio comprised of somewhere between 20 or 30 stocks to really diversify a lot and potentially not have much market risk and slowly transition into that type of position, even in my set it and forget it account, because I would like to start drawing on the dividends and living off of it. And I'm getting to the age where that actually makes sense. Now, again, That is just advice for me. That is not what I always suggest for other people. Depends on your age and your situation and where you are in life as to what structure you want to have in your account. Anyway, my point is, in terms of the housing, I see it the same way. I'm already shaking my head in disbelief because prices are high and rates are high. But I think between the 2008 housing correction and COVID, the Fed has learned how to manage market corrections, and they're going to stop in and stop them from happening. It's like the Fed put, if calamity does come around. Now, this is probably a net negative because a market crash creates an opportunity for people who can't afford a property to be able to get in when the market actually collapses, and it gets people out who are probably over leveraged. I understand their fear and that they don't want to see big market volatility. The negative with that is really that it makes it really tough on the next generation to be able to afford a home. Because my guess is if there is something that should cause a correction, they're going to stop in and stop it from happening, keeping it unaffordable for generations to come, especially in the desirable locations. Because when I look across the country, there's still areas that the pricing is not out of whack or crazy or super expensive. I think COVID sped this all along, and that, or kind of sped up the process. So areas like Las Vegas that were super undervalued, in my personal opinion, part of why I moved here, that all of a sudden with work from home and being able to work remotely, people started seeing these other places as desirable places to actually spend their time. Vegas is really nice. We have phenomenal weather, despite that it gets super hot for a couple of months. The rest of the year is incredible. We never have snow. We don't have any major disasters. It creates a really nice environment to actually live. And as more people are moving here from other states, the schools are improving and we're getting other jobs other than just the casinos. It's pretty cool to see it happening. And if you go out of the country and ask people where they've heard of, it's like New York, California, and Las Vegas. I think that adds some value to properties. And now we have sports teams coming here and they're talking about Hollywood studios from Mark Wahlberg and all these things that are really driving the city with a consistent inflow of people from other states, making us the number one move to state in the country, which is pretty phenomenal, which is why I don't see housing prices here really dropping. For there to be a big boom and bust, we still have to have the boom. Even though prices have gone up significantly, part of that was low interest rates. We don't have those option arm loans in place that are really going to cause some huge correction anytime soon. Unless we have some black swan event and some huge unemployment, I think it just continues to not make sense. When it finally has gone too far is when everybody's jumping in buying houses because it's just going to go higher, not when they're tentative and cautious because they're worried it's overpriced. I see us in this tentative and worried because people think it's overpriced, not this jumping in, closing my eyes because it's just going higher. And everybody keeps comparing today to 2008, and things are significantly different than that. Anyway, that's my take on real estate. I think it's same with the stocks in terms of inflation being sticky, companies making more money. And I think it's going to continue as long as the news is scary and people shake their heads and think, geez, it's all overpriced. It's got to get to that point where people don't think it's overpriced and they're jumping in for it to actually be overpriced. Now, after Friday's close, some things looked really attractive to me. Target looked super attractive. It had a nice pullback after Walmart's earnings, which were actually pretty good. Excuse me. Their guidance wasn't wonderful, but based on price to earnings levels, I think Walmart's overpriced, and that was really what the pullback was about, not the actual earnings. This pushed Target down to like the $125 range, actually a tiny bit lower, which I see as super attractive, especially considering the earnings weren't bad. So I'm guessing neither is Target's, which might see the stock reverse. Might, I don't know. Pays an okay dividend. I also did a video recently about Whirlpool, which I still see as super attractive here, paying a really good dividend, and it doesn't use up a lot of their free cash flow to be able to pay that dividend. And I think it's just one of those things that they've already priced in a bad economy for companies like Target and Whirlpool. Did I say Walmart? I meant Whirlpool if I said Walmart. I apologize. Anyway, Whirlpool looks super attractive, and I think they've already priced in for a bad economy and a bad term going forward. So if things aren't as bad as they've prepped everybody for, they should do quite well. And if things are actually good, they really should do incredibly well. The other one that I've put in that list is Polaris, which I felt the same way about, which is it's gotten so negative on them, and it's a cyclical business, and maybe people bought too many things during COVID, or it wasn't all that long ago. So when things normalize, things will go back to normal for their earnings, and I'm guessing the stock drifts higher too. Now, these are all very long term plays, not something that I expect to just reverse and go straight up. But I think it's one of those things you have to own for 3 or 5 years, maybe even 10 years, just for those cycles to play out and not something that you dive into and trade aggressively. Now, trading wise, Amazon looked super attractive to me on Friday where it closed out. It got below $215 a share, which, in my opinion, is still a little pricey. But as a trade, like I said, I think the market's still going higher. It seems pretty attractive for the range that it's been in. And hopefully it drifts back up to that $240 range and creates a nice big trade. And Meta looked attractive where it closed out too after having, what was it, 20 days in a row of up days, which was a little outrageous in some ways. But the funny thing is, if you look at those days over that span, it really didn't go up all that much in relation to the stock. It was just up a little bit each day by the end of the day. And I think it started those 20 days around $710 a share and ended around $730 a share, maybe a little bit higher. So you're not talking about a very big move, and it's one that it can do in a day, as you saw in the reversal. It's actually below where it started, and that happened in a very short amount of time. That was just a couple of days of trading. Even Google had some news come out that makes it super attractive. I think it closed the week under $180 a share, and all three of these are great companies that I want to have in my portfolio. So I have no problem buying a little here, and if they drop further, I would buy more. And if they don't drop further, I'd be happy to have them in my portfolio. You guys need to decide what fits for you. Please don't follow my advice on things like these. There were actually a whole lot of other ones. One that was interesting is United Healthcare. Now, I'm not ready to jump in on it. There's a lot of noise going on there, but that could have been a nice low the way that it went lower and didn't close on the lows on Friday. But I do worry about some of that stuff playing out in the news for a while and possibly taking some time to actually siphon through and play itself out before they figure out where the company's going to go and what earnings need to be like. I was also very excited to see Hershey's move. I'm hoping it has follow through, but if you missed it, you missed it. And I don't know that I'd be buying it back up here. I'd probably be waiting to see if it pulls back down again and creates another opportunity. Otherwise, I would wait for something else. But I still see opportunity out there. I think the economy is doing okay. There's a lot of volatility and a noise around this new administration. I think it'll make a bumpy road. Hopefully, they do a lot of great things. The interesting thing is, if you look at history, Republicans in office have been nice big pullbacks in the economy a lot of times. Not necessarily that they drive the economy forward, which is super interesting because usually that's what their premise is getting in the office. But I think everybody's premise is they're going to help the economy grow. But we'll see. There's a lot of things out there that are causing fear that we don't know how they'll play out. These tariffs are really interesting. Maybe it'll be good. Hopefully, it creates an opportunity to save on taxes and make Americans' lives better, which is kind of the concept behind it. Now, maybe it ends up backfiring and ends up terrible. So, I wouldn't make any guesses. I kind of see it the way that Powell's been talking about it, which is I'd wait for the data to see how things play out. It's one of the things I made in a comment on a video about, housing, where they were talking about it collapsing. That if they're going to end up doing tariffs on things like lumber and steel, it's going to be really hard for housing prices to have a big drop when those are what are needed to actually build the houses. If all the things going into building a house, including labor, become more expensive, unless for some reason resale homes just drop, the new builders are going to have a very tough time lowering their prices when labor, wood, steel are all becoming more expensive, making their cost of building a house go up. unless they want to just dramatically cut their margins, which they're not going to want to do, odds are they'll just build slower, sell less homes, but make sure their margins are correct, and that'll drive the prices even higher. So, again, it's possible it's all inflationary. It's possible that that causes a big recession, but it's also possible that that's just inflation going through the economy that survives just fine. And I'd wait to see what happens and how it plays out before making any rash decisions. Anyway, hope everybody had a great week. I hope this coming week is the best ever. Do me a favor again if you haven't already, hit that subscribe button and hit that like button. It really helps me know that people enjoy the content I'm providing and to try to provide more of it. If there's something you'd like me to touch on, just say something in the comments. Let me know what you guys bought this week or what you got out of or how you see the stock market going forward. Thanks again and have a great Sunday.